Step onto any retail trading forum, open your feeds on X, or scan the real-time order books, and you will see DataVault AI Inc., NASDAQ Dvlt, flashing as a high-beta micro-cap slugger tethered to a turbulent live price hovering near 0.32 cents. With a total market capitalization sitting around $272 million and an average daily volume that frequently surges past 31 million shares, the stock attracts a relentless wave of short-term day traders chasing momentum and macro-driven retail euphoria. To the casual observer tracking daily percentage swings, DVLT looks like another classic speculative vehicle, a volatile ticker caught in the crosshairs of modern market gamification, algorithmic churn, and sentiment-driven retail sweeps. But beneath this surface-level volatility lies a structural disconnect so profound that standard financial media and conventional equity analysts completely miss the mark. They are evaluating a foundational Web 3.0 data valuation architecture through the lens of a legacy microcap hardware survivor. The market narrative reduces DVLT to its historical roots as a niche audio technology provider, completely blind to the hard engineering reality of what its modern iteration actually solves. Modern enterprises are drowning in petabytes of unstructured telemetry that is legally toxic, structurally unvalued, and utterly invisible to traditional balance sheets. When companies attempt to monetize enterprise data or feed massive generative AI pipelines like IBM's watsonx, they slam directly into a brick wall of regulatory friction, privacy liabilities, and data valuation bottlenecks. Retail investors think they are trading a speculative software-adjacent ticker. Institutional architectures, meanwhile, are quietly wrestling with the absolute necessity of cryptographic data immutability, real-world asset tokenization, and secure experiential data perception. While message boards argue over micro-fluctuations at 30 cents, DataVault AI has engineered an integrated platform suite featuring data value, data score, and the Information Data Exchange, IDE, that treats data not as a passive digital exhaust, but as an immutable, tokenized financial asset class. The mispricing here is absolute. The market prices the company as a distressed legacy asset, while its technological framework is architected to capture the foundational plumbing of the upcoming data monetization supercycle. Market dynamics and institutional positioning. Zooming into the order book and examining the daily tape reveals a classic institutional accumulation pattern hidden underneath intense retail churn. With a 52-week range stretching violently from 0.25 to 410 cents, DVLT has been subjected to the quintessential high-beta washout cycle. Retail investors, conditioned by instant gratification and short attention spans, routinely panic sell during macro jitters or intraday liquidity dips, allowing smart money and strategic entities to quietly accumulate blocks of equity at heavy discounts. The average daily volume of over 31 million shares acts as a smokescreen. High-frequency trading algorithms exploit retail sentiment swings, creating artificial price compression, while underlying corporate restructuring and platform commercialization press forward. Institutional heavyweights and strategic partners are not looking at the daily noise of a 30-cent stock. They are looking at the trailing revenue growth scaling toward a TTM figure of roughly $46 million, alongside an aggressive corporate expansion blueprint that includes strategic acquisitions and joint ventures like Bankwise, Cybercatch, and NYAX. Every time retail traders get shaken out by negative trailing net income figures or headline earnings volatility, such as the recent Q2 26 reporting window, institutional accumulation zones absorb the liquidity. They recognize that microcap turnaround stories require intense capital expenditure and operational transformation before the P&L reflects the true value of the underlying IP portfolio. Market reality check. While retail sentiment pivots wildly based on immediate price action, structural accumulation happens precisely when the stock is most aggressively ignored by mainstream analysts. Before we dive deeper into how this operational turnaround actually functions under the hood, let's pause right here. Are you currently holding a position in DVLT and averaging down through these microcap fluctuations, or are you sitting on the sidelines waiting for clear technical confirmation above key moving averages? Drop your average price or your strategy in the comments below, and let's break down the mechanics. Business model and historical context. To understand why DataVault AI commands such a unique positioning today, we have to completely strip away outdated historical framing. The company's lineage traces back to its origins as Summit Semiconductor, transitioning through YSAW Technologies before executing a pivotal structural metamorphosis via an asset purchase agreement with privately held DataVault Holdings. Outdated Wall Street summaries still try to pigeonhole the company into legacy consumer electronics or wireless audio cycles, referencing its foundational YSAW, ADO, and Sumerian spatial audio intellectual property. But framing DVLT as merely a wireless sound transmitter is like describing Apple as a desktop computer assembly shop in the era of cloud computing. Today, DataVault AI operates on a synergistic dual-division model consisting of its acoustic sciences and data sciences divisions. While the acoustic sciences division continues to monetize patented wireless high-definition sound transmission and interference cancellation IP, securing recent wins like the certification of Optima projectors for Wysaw SoundSend, the true growth engine resides entirely within the data sciences division. This is where high-performance computing, HPC, meets Web 3.0 infrastructure. The company's proprietary software ecosystem is engineered around autonomous AI-driven agents, branded as DataVault, DataValue, DataScore, and DataVault Bank. Instead of forcing enterprises to manually parse and risk compliance penalties when handling big data, DataVault's platform attaches physical real-world objects and corporate data streams to immutable metadata via its Information Data Exchange, IDE. This creates secure digital twins facilitated through initiatives like the Twinstitute and enables precise asset valuation, credential verification, and name, image, and likeness, NIL, licensing. By bridging enterprise systems with IBM's watsonx and multi-platform accessibility frameworks, including planned integrations with the Bloomberg Terminal, iOS, and Android, DVLT has transformed from a distressed hardware microcap into a comprehensive enterprise software and data licensing powerhouse. Future outlook, catalysts, and risks. Looking toward the multi-year horizon, DataVault AI's trajectory is defined by a high-stakes convergence of technological gatekeeper positioning and aggressive ecosystem scaling. As global enterprises face mounting regulatory scrutiny over data privacy, AI training ethics, and cross-border data compliance, the demand for verifiable, tokenized data assets is transitioning from a luxury to an existential corporate necessity. DVLT's primary multi-year growth catalyst lies in the broad commercialization of its data monetization platforms across highly lucrative verticals, ranging from sports, entertainment, fintech, to biotech, real estate, and energy. The ongoing integration of strategic acquisitions such as cybersecurity firm CyberCatch and financial software joint ventures like Mandela Digital Ventures and NYAX creates a compound network effect that dramatically expands the company's total addressable market. Furthermore, as mega-cap tech spenders and enterprise conglomerates aggressively allocate capital towards secure artificial intelligence infrastructure and data governance solutions, platform-agnostic licensing players positioned at the data layer intersection stand to capture disproportionate upside. However, investors navigating this thesis must maintain a clear-eyed view of the risks. As reflected in recent financial disclosures showing a trailing net loss, DVLT is still deep in the capital-intensive scaling phase of its corporate transformation. Operational burn, the need for continued non-dilutive or strategic financing, and execution risk in scaling enterprise software sales cycles represent very real hurdles. Microcap equities carrying high share counts, roughly 844 million shares outstanding, are inherently sensitive to broader macroeconomic jitters, liquidity contractions, and market-wide risk-off rotations away from high-beta assets. Yet this is precisely why looking past short-term price noise matters. Market history repeatedly demonstrates that the most lucrative generational investment opportunities are forged during periods of profound transition, when institutional-grade technology is temporarily obscured by microcap market mechanics. DataVault AI is building the cryptographic plumbing for the next evolution of the digital economy. For the investor patient enough to look past the 30-inch ticker tape and analyze the underlying engineering architecture, the long-term asymmetric potential speaks for itself. Disclaimer: this video is made only for educational and informational purposes. I am not a financial advisor. Any stock, crypto, or investment discussed here is not financial advice. Please do your own research or consult a qualified financial advisor before making any investment decisions. Invest responsibly. Don't forget to like, comment, and share this video to support the channel.